Welcome back. Today, we're diving into August, the dog days of summer, and what this month historically means for the stock market. Is it a time for soaring gains, or are investors more prone to a little seasonal slump? Let's explore. August stock market personality. First up, does August even matter in the markets? Short answer. Yes, but not always predictably. Historically, August sees lighter trading volumes and choppier markets, as many traders take a summer pause. It's a time when volatility spikes simply because fewer players are around. August equals lower volume plus higher swings. August's historical reputation. Now, if you check the track record, August has often been one of the more challenging months for markets. Since 1950, it ranks behind only February and September in terms of worst average performance. For tech especially? It's even tougher. The Nasdaq averages just a 0.3% gain, and that's generous, with positive returns just over half the time. Worst months, since 1950, February, September, then August. Real-life market moments. But August isn't always doom and gloom. In August 2011, Black Monday, markets crashed after the US was downgraded by S&P, with the Dow dropping over 5% in a single day. Back in 1987, August saw major turbulence with an 8% drop from peak to trough in just weeks. Cut to August 2013 flash freeze. Nasdaq halted midday due to a tech glitch. Markets didn't crash, but it highlighted how fragile high-speed trading systems can be. Myths, misconceptions and investor behavior. Let's tackle the myths. You've probably heard the saying, sell in May and go away, right? Turns out, it's mostly a myth. Staying invested, even through summer, has historically outperformed trying to time the market. Another quirky saying, the Mark Twain effect, jokes that speculative danger exists in every month, including August. Twain's tongue-in-cheek observation reminds us. Risk doesn't take a vacation. Myth busting. Seasonal selling can cost more than it saves. Trends to watch in August 2025. Fast forward to August 2025, and the trends are as mixed as ever. A Reuters report warns that August and September could be weak for markets, noting stretched valuations and looming weak inflation data. Meanwhile, the Wall Street Journal likens August to hurricane season, a time when volatility and risk swirl around in the markets. On the flip side, despite early August weakness, markets rebounded quickly, led by tech giants like Microsoft and Meta, demonstrating resilience. Wrapping up and takeaways. So what did we learn? August is historically volatile and often a drag on tech-heavy indexes, but it's not a guarantee of losses. Big events, credit downgrades, technical glitches, even flash freezes, can define the month. And despite the lore, seasonal strategies like sell in May are unreliable at best. Instead, the best strategy is steady investing, informed by fundamentals, not the calendar. Markets have a habit of surprising us, both on the downside and the upside. August in the markets, unpredictable. Stay invested. Thanks for tuning in. If you enjoyed this deep dive, hit that like button, subscribe, and ring the bell for more market insights. See you next time.